So with Sumit earlier talking about Mahabharat and Dronacharya and everything, it put something in my mind. There comes a moment where the student surpasses the teacher, and for Drona that was sort of a big moment when he saw Arjuna do that, I suppose. So sitting with Harsh feels like that right now.
Not at all.
Not that I'm the teacher and he's the student, so that's not the metaphor, but there is sometimes where someone truly surpasses all your expectations. So this is just a joyous, very fulfilling moment to have Harsh here. But before we start the session, I don't want to go into long introductions about Harsh because you can read about it. But the topic today, I think is important because a lot of founders struggle in growing their boards and struggle to grow with their boards. As the complexion of your company changes, as you scale your company and you transition from early stage investors to a more broader based investor base, and as the complexity of the kind of people that come on your board, you have to grow. And we have seen so many cases where we read about this conflict, and that can be a value disseminator. And of the, Kalaari has funded over 120 companies in the last decade, and I have, prior to that, also been in the startup ecosystem for 2 decades. Of the many people that I've seen, Harsh has done this, I would say, almost close to perfection. His own self-growth, and along with that, how he has managed the evolution and complex board to truly add value to his business. So this is a topic we don't speak enough, so I wanted to speak about that. And 2 more things before that I want to add is, I think part of it is because, Harsh is a little bit like an old soul, He, and I say that in a very fond way. I think there's a deep maturity that I saw in him that was always sort of ahead of his years. I think that has allowed him to listen, reflect, and act from a place of reason versus simply a place of emotion. And also when I met Harsh's mother, I said, look, I want to ask you one question I've been meaning to ask you. So I learned, how did you raise such a good person, right? So I think that's a little bit about Harsh. So Harsh, before we talk about boards, I got attracted to you like opposites attract. I'm not a sports person at all, right? And Harsh is all sports. And I learned so much about it from Harsh, from the day I met him sort of in the bylanes of New York, so to speak. But your deep passion for sports has been the impetus to not only start Dream Sports, but today it defines your entrepreneurial journey. So I kind of want to understand how your passion played a role into building this fantastic business that you've built.
Sure. Namaskaram, everyone. Great to be here, and thank you, THub, for having me here. It's a pleasure. Vani has showered too many praises on me. Now she'll get started with the tough questions. But yeah, so I think, would you like to know more about how do we get here, or?
I think how we got here, a lot of people know, but how do you see the opportunity to build sports-based businesses in India, globally, that's there? And, you're on a tear on this, so.
Well, I think, honestly, there's not enough people who are chasing problem solving. I think one of the things that have helped us to scale up and build Dream 11 is that, initially it was a passion project. I love fantasy football, actually, more than fantasy cricket. This started because I'm an EPL fan who plays fantasy football. And then when IPL was launching in 2008, we went looking to play fantasy cricket and there was none. But over the years, once we got product market fit with Dream 11, and that took a while, that took about 5 years to get product market fit, and many pivots and failures and learnings. Once we did that, we've started now growing from just a fantasy sports company to a much larger sports company. And so now we have Dream 11, which does fantasy sports, which is our flagship product. But we also have Fan Code, which does sports content, commentary, stats, and commerce. We have Dream Set Go for sports travel and experiences. We have Dream Game Studios working on sports gaming. We have an investment in Rario, which is doing NFT in sports. We have investments in Elevar, which is sports bats and sneakers. We have investments in Fitter, which does fitness. We have investments in Khelo More, which helps you to play sports in real life. And we have an investment in So Strong, which does esports. The point I'm getting to at all of this is that as a sports culture in India, we have very little in sports. We have the gold standard, world-class Indian men's cricket, which, as you know, sold for the media rights, was the second most expensive in the world. But beyond that, as a sports culture, we haven't really tapped into the potential of the depth of cricket in India, or even the breadth of sports in India, which is kabaddi, football, basketball, and so on. And so really that's our objective of growing now. It's to solve the same problem we've done in fantasy cricket, is to do that much larger in all sports areas in India.
I think the opportunity for sports is immense, and something that is one of those areas that isn't as thought about. And I think you've done such a fantastic job of building that. As I said, I've learned a ton on that from Harsh. But going to this question of boards, there is this notion that board is adversarial to you, and there is always this conflict between sometimes the founder and board. And in the last sort of, close to 9 years or so that I've known you, there has never been a situation where there is a irreparable conflict or emotional trauma that has been caused to each other, right? And I remember fondly the early days, Harsh, where we just met casually in a small room, actually, and it's kind of like, sort of the root. So you go back to that with such fondness. And today we have like 11 people, maybe 13 people, 15 people in the boardroom. It's much more formal. But you have made the transition and evolution along with the scale of the company, very seamlessly carrying people along. So what is it that you've learned about managing boards that you can, share with others?
So I think it's been very interesting because Vani led our Series A and our Series B. Those were our first funding rounds. And that was the first time we got a formal board. And it's very interesting as an entrepreneur also to have investors for the first time, because you have someone that now owns part of your company and is fully aligned of making it a much larger success. So yes, they're like advisors, but way more attuned to helping the company grow, and way more incentivized as well, personally, professionally. I think the role of the board changes dramatically as you go from a Series A to, from a single-digit $1 million company to a $1 billion company. Vani and I used to actually talk much more about product, and she was, wearing your earlier product and CEO hat, helping even in terms of what features we should launch, what retention metrics we should look at, what is a good conversion ratio, where should we acquire customers from, how much should we spend on marketing. I think the role of the board was very different initially, which was almost like at that time you don't have a CXO team. You don't have a chief marketing officer and a chief technology officer and a chief blah, blah, blah. You have the founders and your early stage investors. And so between y'all, you are the CXO of everything. And so it was very interesting to have Vani and all our early stage investors actually work with us hands-on in everything earlier, right from, most of our senior hires would actually interview with them before they joined us. Till today, I think now the transition has been much more about having a core business which works And what else do we do with that? How do we expand that? How do we go to global markets? What kind of investment strategies do we have? We get into mergers and acquisitions. So I think it's much lesser about building the core business, which today is already built, and much more about building the future, expanding, diversifying. And I think that's been the complete transition from an early stage board to a later stage. But I think, like the earlier speaker mentioned, when you're building a company, you're not building the founders. The founders are trying to build an institution that's going to last. And so I think it's very important to take the advice of your board members, not as like a formal board meeting, you have to put down the minutes of meeting and it's a formal once a quarter according to your SHA or SPA. I think it's very important to see them as people that are equally there with the founders to help build the company. And whatever that takes, you have to treat them as equals and as advisors. It can't be like a formal advice that you say yes to the board meeting and then go and do whatever you want anyways. I think that's been the kind of role we've looked at our board playing.
But Harsh, I want to dwell on this topic a little bit more. Whether it's with me or with many of your board members, I've seen you call and say, I have this problem, what's your opinion? That sounds simple, right? But many founders don't necessarily leverage us that way, I can tell you that. It could be for various reasons. You may feel a certain vulnerability about doing that, or you may feel judged for doing that, and whatever the reasons may be. So you have somehow been able to get people to do more work for you, right? So what is it you have learned in managing boards that you would pass on?
I think, first of all, like you said, just be open about your problems, right? Your board is not someone you should be worried about going to problems, saying that, oh, there are investors, they'll get to know some of our problems, they might not invest further. I think it's very important for them to know your problems, to work with you on solutions. In fact, I think that it makes a much deeper bond that allows them to invest further because they feel connected to the company. They feel like they were there with you, working on problems with you, and then solving them. And if they can't solve them, that's okay. But it'll be good because then they won't expect you to solve them. If they can't help you to solve them, then why should you be the one to be able to solve something magically? I think it is very, very important because most entrepreneurs need to look at boards as people that are literally giving you, once they've funded your company and you've diluted for them, they're there giving you free advice. They're there fully available for free. Some of the sharpest minds of the industry are available to you for free. As an entrepreneur, what more can you ask for? So I think it's very important to tap into that resource.
So Harsh, I'm getting signal that we have 5 minutes to wrap up. So one question I want to ask you, I know on a sort of formal basis, this is one of the few trips to Hyderabad. And I'm a born Hyderabadi. So though I, of course, have lived many decades in Bangalore now. But what do you think of the Hyderabad, opportunity for startups and also the current funding environment?
So I'll start with the latter part. I think the current funding environment, look, there's upturns and downturns. We've been doing this since 2008. We saw it in 2008. We saw it in 2012. We saw it in 2016. And it was going to happen in 2020, but the government just, globally made sure that they pumped in enough money and they had enough incentives to make sure that this was pushed out. And it's happening now in 2022. There's always going to be upturns and downturns. And most times in upturns, people build valuation. And in downturn, people build value. And I think it's a great time for entrepreneurs to roll up their sleeves and understand that funding is, you're not going to get great valuations. You're not going to get, pre-revenue, pre-idea, $20 million here, I believe in you. But this is the best time to build. I mean, I truly believe that startups shouldn't have that much funding because that's what keeps them hungry and wanting. Today we have a problem of overfunding. On the second point, I think Hyderabad does a great job for technology. It's an amazing technology hub, and the government is clearly investing amazingly in things like this in the THub to build that entire ecosystem even further. Anecdotally, I can say that we have almost never been successful in hiring people from Hyderabad, but we've always been successful in losing people to Hyderabad. I think
Is there a Hyderabad office?
I hope so. I hope so. At some point we can have a Hyderabad office as well here. Things like THub help further. And we'd love to work with the government to do more. In South, we only have a Mumbai office today. But yes, absolutely. That would be something that we'd love to do in the future.
So, because we don't have time for a lot of questions, we'll take one question.
Hi, Vani. Hi, Vani. Thank you. Really enjoyed the talk. Just curious, as a founder, obviously founder initially, now as a board member and an investor. Clearly, Harsh is doing fabulously well. His company is doing, amazingly well. Of course, there are other companies you have in your portfolio. And the time that you have is obviously limited in a day, right? So many portfolio companies. How do you kind of prioritize, right? Is it like really supporting the growth of companies that are really doing well, or choosing companies that are probably not doing so well, but seeing a lot of promise? As a board member, as an investor, I would love to hear what you thought.
They are probably very deep personal philosophies. I don't know if there's a general answer for everyone. There is this notion that maybe you feed your good companies more. I think that's very short-sighted. All companies will run into trouble, inevitably. And if your role is not to support doesn't always have to say, you ask me for money, I give you the money. I don't even give my children that kind of money, okay? So, support doesn't have to always be only money, right? Of course, money is part of it. So, I think if you don't help founders through their difficult days, I think you should simply be a financial investor. If you're going to, and that's fine too, right? You invest in stock market, you invest in real estate, whatever you invest in. I think an early stage investor somehow have to have that emotional connect into the business. Of course, there is a time and a place where more money is not going to solve the problem. More effort is not going to solve the problem also. So there is a distinction there, but that threshold has to be very high before you give up on a company or give up on a business, right? So I think that you don't operate on that basis, you operate on a need basis. Who needs me and what do they need me for, right? And one of the things, I think there's rarely a founder whose call I don't return within a few hours, if not at least within a day. I can't think of a situation where we haven't done that, regardless of the situation, right? So Harsh, in the last few hours, have you picked up any Telugu?
Not as much as I'd like, but I can say me andariki na best wishes to everybody, and I'll learn more.
All right, thank you so much,
Thank you, everyone.
Harsh.
Thank you so much. We request you to please stay back on the stage. We request Rakshan to please present a small token of our gratitude on behalf of the entire management of THub and the government of Telangana. Thank you so much, Vani. Thank you so much, Harsh. This was a brilliant discussion. Thank you. Ladies and gentlemen, once again a small announcement. If in case you have registered for any other session, the parallel sessions are going on. Kindly check and move towards the networking lounge for networking. We will be moving on to the next panel discussion, which will be with Ms. Shweta Rajpal Kohli and the panel members. So those who have registered for this session, we request you to kindly stay back and take your seats.